Hey guys, welcome back to the channel. Today's video, we're going to be talking about 9 common money myths that you might have heard throughout time. Definitely let me know down in the comments, guys, what are the biggest myths when it comes to money that you have heard. I want to break down this list and I really want to debunk some of these myths. Now, a lot of times you'll see promotional videos up on YouTube, a bunch of different places that say, hey, you can make $10,000, $100,000, $200,000 the very first day that you get into XYZ, which we know is trying to separate fact from fiction, guys. If that is actually real, the chances of getting that are so minute. It's probably a better probability for hitting the lotto than producing the same results that you're seeing on some of these. But let's go ahead, guys, and get into the myths. Number 1, giving up a daily cup of coffee is a financial game changer. Now, it will help when it comes to finances, but you have to take it with a grain of salt, guys, because if coffee is something that you love, if coffee is going to help you perform better, which a lot of people do, giving it up may just have a bigger impact on your financial decisions than actually getting that coffee and actually budgeting for the coffee that you're getting out of there. Small expenses really can dampen the joy of life. They say a lot of times, enjoy the little things. It could be something where if you have an hour drive in the morning, getting that cup of coffee to really relax and enjoy, get you motivated, get you ready for the day, might be worth the couple dollars that you spend in there. Now, this is where you can really examine the budget, guys. When you look at a cup of coffee, if you're getting, let's say at Starbucks and it's $5 to $7 a day, if you're getting coffee 5-6 days a week, it does add up over a 30-day period, guys. If it is something that you really have to have and it is a non-negotiable, which I know a lot of people say that it is, could you cut back on it? Could you get the same product a little bit cheaper? Or have you allocated enough of your budget to make sure that that is completely covered? So again, myth number 1, that giving up daily cup of coffee is going to be a financial game changer. Big picture, that is not the case. Myth number 2, auto dealers give you the best rate on a loan. This also is false, guys. A lot of auto dealers will give the loans to the finance company that gives them the best incentives, which means that if you have, a loan at 5%, you have a loan at 6%, 5% gives a dealer a couple $100, the 6% gives a dealer $1,000. Dealer is going to be incentivized to push a lot more loans towards that institution, which makes it very important, guys. You think about the price of a cup of coffee. Imagine if you're paying an extra couple $100 per month just because the dealership sold your loan to another company that is charging you a higher rate. This is the reason, guys, when it comes to auto loans, it is super, super competitive. When you look at the marketplace, make sure that you are shopping around. Look at your credit unions, look at your banks, look at your online financial institutions. See what is going to give you the absolute best rate when it comes to your auto loan to save you as much money as possible. Myth number 3, financial advice always has your best interest at heart. Now, this is where it is a lot of discretion, guys. When you get a financial advisor, if you have an advisor, if they're fiduciary, life planning, really mapping out a budget, you have to make sure that the person has you in mind. This is probably one of the biggest misses that I see. There are a lot of financial advisors, there's a lot of financial counselors, a lot of life coaches, people of that nature that are more kind of prone on making money than it is actually being able to help you fundamentally. Some people, again, do have your interest really taken to heart. They love what they do. They're super passionate about what they do. Just like me, when it comes to the financial counseling, guys, the ability to help people really is a huge satisfaction piece for me and the reason why I do love to do it. But again, a lot of financial advisors are looking at the money aspect, the monetary aspect. It might not put you in the best position. So again, that is a definite myth that you do not want to. Myth number 4, and this one drives me crazy, guys. You must pay for access to your credit reports. Now, we know there are a lot of credit cards that do offer credit reports for free. Annualcreditreport.com is a free government website that you can actually get your report there free every 12 months. If you want to access your scores, you do have to pay for them, but making sure that your credit is accurate when you get that annualcreditreport.com, pull it out of there and make sure that everything is accurate. Now, again, there are some institutions, there are some different websites that can allow you to access it more than once. Again, annualcreditreport.com gives it to you once every 12 months. You can access it more, but most of the time it is behind a paywall. And with that being said, guys, there are a lot like Experian. I know Experian does it. There's Discover Card does it. Capital One does it. There's a lot of different cards out there that monitor and kind of soft track your credit scores so you can get it for free. So when they have the myth of you must pay for it, that exactly is not true, guys. There are a multitude of ways to get your credit report for absolutely free. Now, myth number 5, hiring an advisor only benefits the wealthy. Now, again, this is kind of a double-edged sword because it is very difficult depending on the advisor that you have, depending on the goals of the advisor. Do they match up with you? This is where a lot of financial institutions, when you look at Ameriprise, when you look at a bunch of different financial advisors that really try to keep your best interest in mind, they say roughly that working with a financial advisor can income boost or boost your income up roughly 5 to 7%, which again, if you're paying the advisor 1%, if they can boost it up that much over just a regular investment, it'll be well worth it. But also for a lot of people, guys, financial advisors can serve kind of as a accountability partner. When you're planning out things, they can talk through it financially, where again, they have the ability for a majority of them to remove the emotional aspect and look at it on what you can afford, what you can't, what you kind of budget from. Again, this is really one of the tricks, is finding a financial advisor, looking at the fee model that they provide, but holistically, looking at someone who has your best interest in mind is really huge, guys. It is game changing. Again, when you look at life coaches, when you look at financial advisors, make sure you have someone that is going to put your interest in the top of mind and always looking out for you. Now, myth number 6, this again is a big one. I know Dave Ramsey would agree with me. Paying off your mortgage early is not worth it. Now, this is something that we've talked about quite a few times on this channel because I'm kind of in the same boat. Mathematically, people say to invest the money. Do not pay off the mortgage, guys, especially if you have a lower rate mortgage. Do not pay off the mortgage at all. It is much better served when you look at the investment vehicle to put the money there. However, when you look at the emotional component, when you look at the psychological component, when you look at the ability and the people within the United States, and I think this again is kind of the game changer, is you're willing to take risks above and beyond what you normally would because you are not tied down to a house payment. You might work at a job and have a job that you're not too happy with, afraid to move because you have a family, you have bills, you have a mortgage that you do not want to put on the line. It is, really a different kind of mindset when you do not have that mortgage any longer. Again, the psychological and the emotional aspect that comes with it. And it also gives you the ability, and again, looking at the baby steps, listening to Dave Ramsey as well as a multitude of financial counselors, I really think it is beneficial to pay off the mortgage. Guys, eliminating the mortgage, which again is exactly what we're looking at doing. Eliminating the mortgage is a guaranteed return once that is paid off. So let's say you're paying $1,000 just on your mortgage. If that was paid off and you had that $1,000 to invest in the market, because now the home is free and clear, you might not have as many years compounding with the interest, but the ability to put $1,000 or $12,000 a year into an investment account is going to be astronomical, and you don't have the mortgage payment, guys. That is really the big thing. It is a guaranteed return. Now, with that being said, a lot of people compare a mortgage to investment returns. It is not really, again, kind of in the same game. Comparing a mortgage to, let's say, savings accounts, into CDs, into bonds that are guaranteed. Because remember, paying down the mortgage, you are guaranteed to get that return as the mortgage does get paid down. Similar to those products versus the risk of investing in the stock market and losing out money. Myth number 7, you do not need an emergency fund. This again is one absolute huge one, guys. You have to have an emergency fund. I really stress this, as well as pretty much every financial counselor that I know. Sticking up and building an emergency fund, the faster that you build it, getting the savings out keeps you from financing additional things. You need a nest egg 3 to 6 months of your expenses put into a high yield savings account, because if you do not, as soon as something happens, boom, you go right back to credit card debts. You go right back to unsecured debt. You go right back to financing your life. Now the items that you finance, you're paying more for, which means you have less to invest. You have less disposable income because it's being eaten up by the interest. In addition, guys, having that safety net is a game changer because if anything does happen, if you're laid off, if there's a job loss, if you're out unexpected for a health concern, you are going to have money to cover those expenses that you don't have to worry about. Myth number 8, you must monitor the stock market daily. Guys, this is one huge big myth. I know when you do investments into the stock market, it's tied to emotionally. It is your hard-earned money when it's going in there. But get valuable advice. Like I've said before, guys, I invest in ETFs, which are a lot more of a hands-off approach because it is a broad spectrum of the market. I'm investing across a bunch of different companies instead of specific ones. And we've always said you can't time the market. Which again, we've talked about this before. It is near impossible. Even the greats cannot exactly time the market, but you can be consistent versus intensity. And again, we say that again, being very consistent with the investment strategy and making sure you have a map of exactly how you're going to do it. And the final myth, guys, number 9, money can make you the happiness. Studies have linked money with happiness, but it is not ultimately what makes people happy. Money can help a little bit when you don't have to worry about that, but making it ultimately happy is the relationships. There are a lot of people that have an incredible amount of money that are super unhappy, that are seeking counseling, are seeking a lot of mental issues just because of the money myth. It is really not, life. Find out what is going to make you happy. Spend your money on that. If it's donating, if it's setting up a cause, if it's helping people, regardless of what it is, guys, you can be rich and happy with whatever you have. Sorry, guys. So that'll do it for today's video. Again, just wanted to cover some of the common money myths that I do see. So let me know in the comments what you guys think. If you like the content, guys, go ahead and subscribe to the channel. And as always, thank you guys for watching.